You've been very bullish on Bitcoin, and now that we're at all-time highs, I know that you had a year-end prediction of somewhere around 150,000. With 6 months left in the year, are you looking at for that target, or do you think we could go higher?
I think we could do better than that, because there's a lot of levers that drive Bitcoin's upside. It's not just wallets anymore. That used to explain a lot of Bitcoin. Like we started writing about Bitcoin 9 years ago, and we found that so much of the price change in Bitcoin was just explained by wallets and activity per wallet. So we just realized it was a network value asset. And as long as that would grow, we saw upside in Bitcoin. And Bitcoin was around $1,000 when we first did our first white paper. But today, I think Bitcoin has more important roles because it is, I think, becoming, I think it's being recognized as a store of value. That's why the U.S. is considering adding it as a strategic reserve, and it won't be just the U.S. that does that. And if it's a strategic reserve asset, and then institutionally, it's hugely underowned. I love the stat by Bitwise that 95% of all Bitcoin has been mined, but 95% of the world doesn't own Bitcoin. I mean, that's a huge mismatch. But the other thing is that Bitcoin, of course, responds to global liquidity because it is a risk-on asset. And that ties back into our earlier conversation about the Fed and Fed cutting next year. Well, if the Fed's going to be dovish next year, that's bullish for Bitcoin. So, I mean, I see like 3 reasons that could really benefit Bitcoin, and it's still an asset that that we find still faces a lot of skepticism from clients.